네, 안녕하세요. Hello, everyone. We are excited to host global investment webinar on global energy scenarios in collaboration with Rystad Energy. So our speaker today is Mr. Artem Avramov, Head of Clean Tech Research at Rystad Energy. And he is an expert in sustainability and carbon neutral strategies. And Artem, thank you for joining us today from Norway. And please allow me to briefly introduce today's agenda in Korean. 안녕하세요. 오늘 진행을 맡은 금융투자협회 국제업무부의 신명수입니다. 오늘 웨비나는 약 30분 정도의 주제 발표와 Q&A 순서로 진행하겠습니다. 발표 중에 진행이 있으신 분께서는 채팅창에 구체적인 질문을 한국어, 영어 관계없이 남겨주시면 Q&A 시간에 최대한 많이 다루도록 하겠습니다. 그리고 발표하신 분들께는 저 발표 자료는 오늘 참가하신 분들께 내일까지 메일로 보내드리도록 하겠습니다. 그리고 다음 주부터는 금융투자협회 유튜브 채널을 통해서도 녹화 영상을 다시 보실 수 있습니다. 자, 그러면 발표에 앞서서 오늘 행사의 공동 주최자이신 라이스타드 에너지의 한국 지사장을 맡고 계신 장원재 지사장님께 인사 말씀을 청해 듣도록 하겠습니다. 지사장님.
네, 감사합니다. 심영수 부부장님. 오늘 참석해 주신 모든 분들께 감사드리고 우선 저희가 그 메인 주제 발표에 앞서서 저희 5분 정도 제가 라이스테드 에너지 회사 소개를 먼저 해드린 이후에 바로 이어서 연사 간략한 프로필 소개를 해드리고 그리고 바로 이제 발표를 시작하도록 하겠습니다. 네, 라이스테드 에너지는 에너지 섹터에 특화된 세계적인 독립적인 리서치와 데이터 솔루션을 제공하는 회사입니다. 슬라이드를 네, 저희 숫자로 간략히 설명을 드리겠습니다. 저희는 2004년에 회사가 설립이 됐고요. 이제 올해로서 20년 차 된 회사입니다. 그리고 저희가 전 세계 30개 이상의 이제 지사가 있어서요. 이제 전 세계 700명 이상의 직원들이 10국적 이상의 직원들이 함께 일을 하고 있습니다. 저희가 이렇게 다양한 지사를 설립하게 된 배경에는 에너지 전환에 따라서 이제 글로벌 에너지 디맨드 센터에 저희가 더 가깝게 다가가고자 저희가 이렇게 지사 수를 이제 굉장히 확장을 지난 5년간 해왔고요. 그 일환으로 한국 지사도 2021년에 2년 초에 설립이 됐습니다. 라이스테드 에너지가 존재하는 이유는 단 한 가지입니다. 과거에도 그랬고 현재까지도 에너지 쪽 관련된 어떤 전문가들께서 공통적으로 느끼고 계신 페인 포인트 중에 하나가 어떤 양질의 의사결정을 내리기 위한 어떤 중요한 의사결정을 내리기 위한 양질의 데이터 또는 데이터의 양이 부족하다 인데요. 저희가 그래서 저희가 그 부분을 정확하게 해소하고자 저희는 존재합니다. 라이스테드 에너지의 어떤 좀 그 특별점은 저희가 모든 데이터를 직접 수집을 해서 저희 가장 작은 단위의 데이터부터 쌓아 올려서 전체가 될 때까지 완성을 하고요. 그리고 그 전체가 된 그림을 통해서 이제 저희 그 클라이언트들께서 질문 주시는 내용에 대한 어떤 답변을 드립니다. 그리고 그러한 부분들이 이렇게 신뢰할 수 있게 저희가 그 모든 이제 어떤 투명하게 이제 데이터를 다 공개가 되고 있고요. 그 외에도 이제 데이터 외에도 저희가 또 분석 자료라고 해서 그렇게 굉장히 이제 다양한 이제 그런 자료 리포트 같은 것들을 저희가 또 퍼블리시하기 때문에 그런 것들을 통해서 이제 특히나 금융권에서는 이제 저희 애널리스트들과의 어떤 교류를 굉장히 선호하시고요. 어떤 특정한 어떤 이슈가 있을 때, 어떤 프로젝트가 있을 때 애널리스트와 이렇게 직접 어떤 미팅을 하신다든지 그런 부분에 굉장히 큰 가치를 느끼고 계십니다. 저희가 제공하는 서비스는 이렇게 네 가지가 있습니다. 첫 번째 데이터, 그리고 두 번째 애널리틱스, 분석 자료, 그리고 세 번째 애드바이저리 컨설팅, 네 번째는 교육 사업인데요. 구독을 통해서 이렇게 하시는 것은 첫 번째와 두 번째, 데이터 또는 애널리틱스를 구독을 하고 계시고요. 애드바이저리는 이제 개별 건 바이 건으로 이렇게 하고 계시고, 교육도 이제 저희가 이렇게 프로젝트 단위로 이제 개별 케이스 바이 케이스로 하고 있습니다. 어, 우리 인류가 구축해 놓은 에너지 시스템에는 이렇게 왼쪽에 보시는 프라이머리 에너지부터 오른쪽에 이제 디맨드 센터, 디맨드 섹터까지 이렇게 그리고 그 사이에 이루어지는 다양한 어떤 그 에너지 몰레큘이든 일렉트론이든 그 컨버션을 지금 저희가 해서 이제 수요처에서 공급처에서 수요처로 전달을 하고 있습니다. 이 안에서 굉장히 다양한 이제 의사결정과 비즈니스 투자와 의사결정이 이루어질 텐데, 어, 이런 중요한 굉장히 천문학적인 돈이 들어가는 그런 의사결정임에도 불구하고, 상당히 많은 양의 이제 이나 양이 부족해서 이런 부분을 제대로 의사결정을 내리시는데 어려움이 있으시기 때문에 저희가 이 부분을 이제 데이터를 통해서 이제 해석에 도움을 드리고 있다. 이렇게 봐주시면 되겠습니다. 그리고 그런 일을 잘하기 위해서 저희가 40만 개 이상의 에셋, 하나의 에셋이 프로젝트라고 봐주시면 되겠고요. 그리고 5천 개 이상의 회사, 그리고 매일 10,000건 이상의 데이터 업데이트, 그리고 5만 명 이상의 저희 그 구독, 서브스크립션 하시는 분들에게 매일같이 가치를 전달을 해드리고 있습니다. 이렇게 하나의 데이터 프로젝트 에셋이 모여서 국가가 되고 또 국가가 모이면 또 전 세계가 되듯이 이러한 저희만의 고유 IP를 통해서 전 세계 에너지 자원들을 태양광, 풍력, 수소, 원자력, 석탄 등등 이 모든 에너지원들을 쌓아 올릴 수 있고 이 일을 통해서 이제 에너지 전환이라고 하는 굉장히 거대하고도 또 긴 시간이 이제 필요한 이런 이슈에 대해서 그 안에서 항해하실 수 있도록 저희가 어떤 나침반 또는 시뮬레이션, 시나리오 분석 등등 이런 부분들을 해드릴 수 있고 그리고 이 안에서 한 특정 에너지원, 예를 들어서 태양광이다 하면은 태양광 안으로 깊이 들어가셔가지고 그 안에서 이루어지는 다양한 어떤 공급망 이슈라든지 투자 관련된 어떤 어, 기회라든지 벤치마킹 또는 M&A 이 등등에 대한 부분까지도 저희가 이런 다 트래킹을 하고 있습니다. 그래서 이런 부분들을 정보를 이제 활용하셔서 이제 금융권에서도 이제 투자 의사결정 또는 어떤 은행 같은 경우에는 이제 론 관련된 그런 쪽으로도 활용을 하고 계십니다. 그리고 저희만 할 수 있는 것이 이렇게 에너지원들을 이렇게 다른 에너지원들을 다 쌓아 올려서 이 전체적인 하나의 툴 안에 다양한 에너지원들을 쌓아 올릴 수 있는 회사는 전 세계에서 라이스테드 에너지가 유일합니다. 그러면 저희가 어떤 팀들을 도와드리냐? 여기 왼쪽에 보시면은 굉장히 이제 다양한 주체가 있죠. 에너지와 관련된 주체는 모든 주체가 다 포함이 됩니다. 왜냐면 워낙 기본적인 그, 그 산업이기 때문에요. 근데 정부부터 해서 해운사, 금융권, 트레이더, 그다음에 공급망, 그다음에 에너지 개발 회사, 은행, 그리고 포항제철 같은, 포스코 같은 이제 인더스트리얼 기업 같이 이제 특정 산업을 불문한 이제 그런 다양한 이제 주체들이 라이스테드 에너지를 사용을 하고 있습니다. 그리고 그 안에서도 어떤 전략과 관련된 팀이라든지 어떤 밸류에이션과 같이 어떤 그런 팀이라든지 그리고 마켓 어세스먼트, 벤치마킹 이런 일들을 하시는 팀들이 이제 주로 라이스테드 에너지의 데이터들을 사용을 하고 계시고요. 또 오른쪽은 저희가 이제 모든 에너지원을 커버를 하고 있고 그 안에서도 그 마켓과 공급망을 양쪽을 다 커버를 하고 있다. 이렇게 이제 봐주시면 되겠습니다. 그러면 저희가 어떻게 도움을 드리고 있는지 클라이언트 포털이라는 걸 저희가 구축을 해서 웹 베이스로 로그인을 하셔서 이 안에서 데이터와 이제 분석 자료를 구독을 통해서 이제 활용하실 수 있게 저희가 만들어 놨고요. 이게 실시간으로 저희가 업데이트를 하고 있기 때문에 항상 최신 정보를 보고 계시다는 점과 그리고 굉장히 이제 사용하기 편리한 그 장점을 갖고 있습니다. 네, 그러면 이제 마지막으로 이제 저희가 이제 그 금융권에 이제 저희가 제공하고 있는 인베스터 솔루션에 대해서 간단하게 말씀드리고 이제 연사 소개를 이제 해드리겠습니다. 크게 이제 저희가 그 갖고 있는 그 전체적인 솔루션을 저희가 이렇게 4등분을 해서 이제 금융권에서 이제 입맛에 맞게 저희가 분류를 해놓은 겁니다. 그 첫 번째는 업스트림이라고 해서 오일 앤 가스 상류 부문, 그러니까 개발하는 이제 회사들을 좀 이렇게 그 타겟팅하는 이제 금융권. 그다음에 두 번째는 공급망을 이제 타겟팅하는 금융권. 그리고 세 번째는 뭐 수소, 2차 전지, 뭐 그 태양광, 풍력 등등 클린테크에 관련된 좀 분석을 하고 이제 필요로 하시는 금융권. 네 번째는 데이터보다는 우리가 시장에 앞서서 ahead of the curve를 위해서 가장 최신의 그런 분석 자료를 그때그때 바로바로 이제 어떤 부문이건 상관없이 오일 앤 가스부터 클린테크까지 모든 영역에 거쳐서 우리는 분석 자료만 필요하다 이렇게 하시는 분들은 이제 애널리틱스만 이제 구독하실 수 있게 4등분을 해놨습니다. 이렇게 첫 번째가 업스트림은 이렇게 업스트림과 관련된 뭐 long-term oil solution부터 뭐 short-term 그렇게 뭐 트레이딩 그리고 gas 트레이딩, gas market long-term, 뭐 shale solution 이런 등등부터 해서 오른쪽 supply chain에 들어가는 뭐 FPSO라든지 뭐 이렇게 해양 쪽이라든지 뭐 well, 그 rig, vessel 이런 쪽 oil field service 이런 쪽이고요. supply chain도 마찬가지로 이제 그 서플라이 체인에 들어가는 부분만 이제 집중해서 이제 저희가 그 액세스를 드리고 있고요. 이렇게 그 보시는 것처럼 대시보드를 통해서 데이터가 시각화되게 돼 있고 또 분석 자료도 이제 계속 그 저희가 업데이트를 이제 여러 번 업데이트를 하고 있습니다. 마지막으로 클린테크는 이제 말 그대로 이제 클린테크에 속하는 이제 시장과 공급망에 해당하는 이 다양한 에너지원들을 커버를 해드리고 있고요. 이 안에서 수소, 글로벌 에너지 시나리오, 뭐 M&A, China Renewables 등등 이런 다양한 이제 리포트 오른쪽에 보고 계신 리포트까지도 저희가 이렇게 커버를 하고 있습니다. 그리고 이제 뭐 그 우리는 이게 좀 커스터마이저블 된 걸 원하신다 그러면은 뭐 이렇게 5개를 그냥 그 지정하셔가지고 그렇게도 이제 섞으실 수 있고요. 마지막으로 이제 애널리틱스만 구독하고 싶으시면은 이 아래 보시는 오일부터 뭐 전력까지 모든 그 에너지원들에 대한 이제 분석 자료만 이제 구독을 하실 수도 있습니다. 네, 여기까지가 제 부분이었고 이제 다음으로 이제 저희 애널리스트 소개를 해드리도록 하겠습니다. Artem Abramov, he is our head of cleantech research at Rystad Energy. He's based in Oslo, Norway, our global headquarters. And his main area of research is hydrogen, CCUS, electrical batteries, and energy transition. And he also does research on sustainability and decarbonization strategies. He holds a Master of Science degree in Financial Economics from BI Norwegian Business School, and also Bachelor of Science in Applied Mathematics, and majoring in Statistics. So I would like to give the floor to Mr. Abramov now. So please, Artem, the floor is yours.
Thank you, James, and good afternoon, everyone. It's a pleasure to present to you today. I will share some of our latest thoughts on the energy market and how our outlook for the energy market has evolved since 2020, 2021. Because it is very important to acknowledge that the energy system, the global energy system today, is changing faster than it ever did historically. And many trends which global investor community is kind of discussing all the time, they have been facing a certain headwinds in recent quarters. So some of the topics which we'll try to address today, three extremely important topics from my point of view. We'll talk a little bit about the outlook, different scenarios for the future energy system, and specifically what this outlook means, what it implies for different clean energy sectors, clean technologies, various technologies which were gaining a lot of traction in the financial market and investor community lately. Then we'll talk a little bit about so-called reality check for the green energy, because the attitudes of the investor community towards some energy transition trends has evolved quite a bit in the last 2-3 years. And finally, we'll also talk about the strategy development of major oil and gas producers around the world, because in the end of the day, these are the companies which control a very large chunk of global energy supply. They will keep doing it in the foreseeable future. And these are also the companies which can finance a large number of new initiatives, new energy system initiatives from their balance sheets without really, requiring a large amount of external financing. So now, before we kind of jump into the details, I believe James has already showed this slide, but let me just elaborate on this one more time, because this is the way how we think at Rystad Energy, how we think about the global energy system. So you have all primary energy sources on the left side, renewable energy, various fossil fuels, bioenergy, waste, etc. And then this energy is converted into more useful molecules or directly into the electricity. And finally, it is distributed to end consumption sectors, which you see on the right, which are typically buildings, transportation, or various energy intensive industries. When we think about the future of energy system, we try to define our scenarios in a consistent manner for all different value chain segments or the energy sector. So what I mean by that, when we talk about a certain long-term outlook for oil consumption, it will correspond to a certain view for solar markets, to the hydrogen economy, to battery energy storage, etc., etc. And our long-term scenarios, they're generally defined in terms of remaining carbon budgets, which in turn correspond to a certain temperature increase from the pre-industrial levels until the end of the 21st century. So what you see on this chart is something that we call a solution space, 1.5 to 2.5 degrees Celsius temperature range. We do believe that with continuous development of policies around the world and our R&D process, independent development of technologies, ultimately we will land somewhere in this fan of outcomes. But of course, it is very early to conclude where exactly we'll be. Well, maybe it's already fair to say that 1.5 degrees Celsius is a real stretch. It just requires so many things to be implemented simultaneously. We need to resolve global supply chain bottlenecks. We need to address global political tension. The entire world needs to act as a single entity, and still there will be some cost implications for end consumers. So this is what 1.5 degree reality actually entails. Now, what we do on our side, we optimize global energy system using these carbon budgets as an input. We optimize global energy system from a pure economic point of view. And in this table, you could see how the ideal energy system should look like 25, 30 years down the road in 2015 for different sectors. You have all these different clean tech KPIs, and you can compare the call on these different technologies compared to where these technologies are today. One thing which is very important to, I guess, acknowledge, carbon capture, it just has to become a success. Today, it's already almost impossible to develop a credible climate model without CCUS turning into multi-gigaton scale industry by 2050. So today, we are capturing around 15 million tons of CO2 per year. That's a global number, and most of that is actually utilized for enhanced oil recovery operations. So we capture CO2 to inject it back into the oil fields to produce more oil. By 2050, we need to bring this number to at least 4 gigatons per year if we want to be 2 degrees compliant. Now, this is a factor of 100. That's a magnitude of growth which is needed for CCUS specifically. And of course, in 2050, most of these 4 gigatons will have to be either stored permanently, but ideally we have to find new utilization markets for CO2. And I'm mainly talking about production of various low carbon industrial products. You know, there are a lot of pilot projects in different parts of the world related to clean cement production with captured CO2. And of course, I'm talking about various synthetic fuels where, you know, the end products are produced artificially from captured CO2 and clean hydrogen. So today, the cost of production for these synthetic fuels, they're much, much higher than for their fossil fuel counterparts. But with the continuous cost compression, clearly this sector offers a lot of, you know, investment opportunities in the future. In addition to CCUS, we need to reduce the use of fossil fuels in a structural manner in some industrial applications if we want to be 2 degrees compliant. It's important to keep in mind that CCUS is not the only solution. Sometimes it's not even the most economic solution in various energy-intensive industry sectors. So today, 85% of our energy demand in industry comes from fossil fuels. By 2050, we need to bring this number to at least 60%. Power sector, of course, we have significantly upgraded our outlook for nuclear and hydro since 2021 global LNG price crisis. But we primarily did it for the countries which already have significant experience, significant know-how in nuclear. So South Korea would be a good example of such country, together with Japan, or let's say France in Europe, some North American countries. In a grand scheme of things, in a macro context, decarbonization of global power mix is predominantly about continuous deployment of variable renewables. So we're talking about continuous growth of solar, wind, accompanied by battery energy storage solutions. So this is what makes, I would say, the difference for the macro picture. Then we have transportation sector. You know, today only 5% of energy demand in transportation comes from non-fossil fuel products. And the vast majority of that is traditional ethanol and biodiesel, essentially biofuel products, which cannot be reused standalone as drop-in fuels. They can only be used in a blended fashion with traditional fossil counterparts. We have seen some success stories for electric vehicles. We have seen them in Europe, in California, in China, obviously. We start seeing them also in other Asian markets. By 2050, these success stories, they also have to spread to a heavier, road freight segment. We have to see some solutions in maritime, and it's too early to say whether it's, hydrogen derivatives or biofuels, which will win this battle. And we have to see some solutions for aviation. But the bottom line here is that in 2050, 50% of energy demand has to come from non-fossil sources if we want to be 2 degrees compliant. And of course, many of these things, they will never be possible if policymakers cannot create carbon markets environments which triggers the investment decisions in these decarbonization technologies. Today, we do have some maturing carbon markets around the world, like European ETS would be an example, UK ETS, New Zealand, well, China, in Japan, they're kind of moving gradually on this domain. But the price levels which we observe from these markets is not anywhere close to where the price needs to be if we want to trigger tangible FIDs in many of these clean sectors. So in 2050, if we want to be, let's say, 2 degrees compliant, we believe that we need to have sustainable compliant carbon market environments with the prices in $60 to $150 per ton range. lower in non-OECD countries, higher in OECD countries, but that is basically what is needed if you want to make any of these scenarios a reality. And very finally on this slide, today we are investing around 2.7 trillion US dollars into the energy system every year. This is everything combined: fossil fuels, renewables, all clean technologies. If we keep investing, if we keep the total dollar tag at the same level, but gradually move our investments from fossil fuels to renewable energy sources in the next 20, 30 years, this is enough actually to be 2.5 degrees compliant. That is why we are saying that status quo or business as usual scenario no longer corresponds to the global warming of 3 or 4 degrees Celsius. The upper end actually has moved down to 2.5 degrees. But if we want to get to more ambitious energy system scenarios, we actually need more capital. We need to increase, the total annual spend by up to 35, 40%. That is the call, on the total capital in 1.5 degree scenario, simply because 1.5 degree scenario requires us to overload global power mix with variable renewables already in the next 5-10 years. We need to redesign the grid in many mature regions. It has to be more or less rebuilt from scratch. And at the moment, these investments are not yet happening. Much of this capital has to come from the governments, but there is also a significant call on private and institutional investors to step in if you want to achieve any of these climate goals. Now, with this in mind, it's important to understand, because these were some hypothetical scenarios. When it comes to the current pathway, things have been moving in the opposite direction lately. We observed degradation in medium-term economic outlook. All major economic agencies, the GDP growth forecast, which they expect today for 2024, 2025, 2026 periods, is lower than the outlook they had 18, 24 months ago. And this had a huge hit on the amount of capital flowing into the clean tech space. And we're going to discuss it a little bit more in detail in a second. But today we are talking about somewhat slower speed of decarbonization from the second half of 20s, if we want to be, with the current policies and the current fundamental trends which we are observing in different sectors. Where this fits into the general solution space, well, it's too early to say, but if you look at an example of, let's say, oil consumption outlook, the current trajectory, current pathway, today we are saying that we are tracking 2.1, maybe even 2.2 degree performance. So we are not yet, close to the Paris Agreement's temperature range. And again, the general direction of provisions has been, in favor of higher oil consumption in medium term, high peak, and prolonged plateau. Part of the story here is extremely impressive growth in petrochemical sector, and maybe not as quick transition as many analysts expected 2-3 years ago in transportation sector. So, the oil consumption proves to be very sticky, even in passenger car segments. Needless to say, it is much stickier in the heavy duty sector, maritime, and aviation. So now, with this kind of backdrop, let us now take a look at how the investor community, how the capital markets actually reacted to the developments in clean energy technologies in the last 2 to 3 years. And one of the things which we do at Rystad Energy, we track a stock index with approximately 55 significant public names, which we believe are very representative for various green energy sectors. So we don't include the companies which have significant exposure to, let's say, oil and gas or to other, industry segments, just to avoid kind of a bias in interpretation. It's a pure play, hydrogen, CO2 management, renewable energy developers, also biofuel producers. And if you look at this total return index, well, 2020, that was the period when green energy valuations tripled over the course of 9 to 12 months. And at that time, many investors started talking about so-called green bubble, which has actually burst by now. It was the first year of COVID. Remember that we had so many lockdowns and temporary loss in natural gas and oil consumption. And many people thought that some of this loss was structural. Well, now we know that everything came back. Even aviation sector has recovered to pre-COVID levels. So since the peak in early 2021, we have seen continuous and systematic decline. It was like a free fall in green energy stock markets. Today, we are back to where the market was in 2019. And keep in mind, it was a very counter-cyclical behavior because the general stock market actually grew by 45% in that period. Now, you could start looking into the details, but honestly, it's not easy to find specific subsegments which didn't feel, this entire pressure on the green energy stocks. You could, for example, split these stocks into solar and wind developers, which is a very large chunk of the entire peer group, and all other clean tech sectors like green hydrogen, CO2 management, biofuels. So, well, maybe you could argue that clean tech stocks, they were more volatile. Many of these companies, they're actually earlier on their growth cycle, but directionally, the trends were very, very similar. Now, if you go even more granular, you will see that it is really the green hydrogen sector, electrolyzer manufacturers, project developers, fuel cell producers. This is the part of the green energy index which was hit particularly hard. 85%, that's the magnitude of the loss in the value in the last 3 years from the green hydrogen index. And if you start looking at individual companies, it is hard to find any company which didn't lose more than 70% of the value. The segment which has been a little bit more resilient is CCUS. So CCUS here covers predominantly various CO2 management companies. They provide CO2 capture technologies. And many of these companies like Aker Carbon Capture, they have actually been able to secure early contracts, first firm agreements with their customers in that period. So today they are already valued on something that is fairly tangible, whereas green hydrogen stocks, they're still valued predominantly on the basis of hypothetical growth expectations in future. Despite these developments, I think it is very important to realize that this development doesn't necessarily mean that investors lost their confidence in energy transition. We actually argue that the most significant factor behind these developments was exogenous, essentially. It was coming from the development of macro fundamentals. And, many of these companies, they're small startups, and they are still issuing a lot of new capital to finance their new projects. And frequently they defer to the debt markets, to the obligations as a cheaper source of financing. And they kept doing it even in 2022, 2023, when interest rates started skyrocketing. So if you look at the entire peer group, today, they're already averaging at 8 to 9% as the actual cost of debt, compared to 4-5 percentage points, which they saw in 2021. So it was a very quick, impact of increasing spot rates on the actual cost of debt. So even though the peer group has been able to gradually increase their earnings before interest and taxes since the start of COVID-19 pandemic, all this growth has been absorbed, has been eaten away by increasing debt service. So earnings after the interest and taxes hasn't increased at all, actually. They have been flat since 2019. And this was a huge mismatch between the expectations of the investor community, back in 2018, 2019, and what actually happened. But again, it is the interest rate alone which explains very large chunk of this downward pressure which we observe for the stock prices. So finally, if you look at the actual price earnings multiple, how it developed for the peer group, well, yes, we went through these ridiculously high levels of 100, 120. It was a complete anomaly, honestly, in late 2020. This sector was valued at 120 years of their earnings at the time. Even, the technology sector, the big tech, never had such high IT multiple. 70 to 80, maybe up to 90 was a common range, but it was a clear correlation with the dot-com bubble period in late 90s, and many people were making this analogy, and to some extent they were right. Now we have seen this enormous correction, but it is very important to realize that the investor community still looks at this entire green energy sector as a growth-oriented sector. Price-earnings ratio today typically is observed in 40 to 50 range. This is much, much higher than price-earnings ratio of the entire economy. Typically, it is around 25 in the current cycle. And certainly, it is much, much higher than typical price-earnings ratio in, let's say, oil and gas, which is normally in 10 to 15 range. And, oil and gas companies, they have been arguing for already many years that they're severely undervalued based, on this metric. And well, probably they have a point, but you could see the clear difference. All right, and now I am moving to the last part of my presentation. I want to talk a little bit more about the development or the strategy of major oil and gas producers, because they still remain, the most significant players to some extent in the energy market, in terms of their influence on the general energy system, and in terms of the availability of the capital from kind of internal streams. And well, one thing which is very interesting, oil and gas community is not really eager to accelerate their activity levels in the latest upcycle. In 2021, 2022, in the COVID period, we were still debating if this increased focus on the cash returns for the investors was a structural shift or was a temporary, cyclical metric. I think now we're getting more and more evidence that something changed in a permanent manner. So only 45 to 50% of cash from operations goes back into the capex. This is industry-wide metric. These numbers are even lower for some large super majors like ExxonMobil, Chevron, Shell, or BP. It is typically a little bit higher for smaller producers, but these numbers are significantly lower than traditional 60 to 70% range, which we observed in previous cycles. The difference between the two numbers perfectly corresponds to increased cash returns for the investors. The industry is very committed to extremely high dividend yields, continuous focus on share buyback programs and other measures to basically pay cash back directly to their investor community. And when we talk to various oil and gas customers, they all use different terminology, different words, but broadly speaking, their entire strategy today is focused on three major pillars. Everyone is trying to achieve maximum possible resiliency of their own supply. The planning process has become much more complicated due to increased level of geopolitical uncertainty. So whatever you do, whatever new investment decisions you make today, you want to prioritize new fields which has, which have break-even price that is like $40 to $50 per barrel lower than the actual oil price you observe in the market. Because everyone believes that there are serious risks of another extreme down cycles, rapid swings in the oil price. Many things depend on the OPEC strategy and the general geopolitical environment. So you want to make sure that you are the last man standing in these games. This is absolutely the key focus for oil and gas players. Then decarbonization of the core activity. A lot of focus is still on Scope 1 emissions. Scope 2 focus has become quite widespread as well. Some largest players, they start introducing Scope 3 targets as well. And some players, but not all, they are actively looking at new business opportunities in other sectors. And this is where we observe big diversity. European oil and gas players, they try to step into a renewable energy sector, but they started making these announcements 3-4 years ago, and honestly, their investors, they did not entirely appreciate this transition. So Shell and BP, they severely underperformed their American peers in the last period, partially because there is a quite significant, mismatch between risk-return profile of renewable energy and traditional oil and gas. And what is also interesting, the same companies, which you see on the right here, largest public super majors, these are the companies which accounted for nearly all upward revisions in global oil and gas production outlook in the last 5-6 years. Many of these revisions, they came from inorganic acquisitions. So the majors actively, acquiring smaller players. Typically, they prioritize the companies which are really complementary to their portfolio. But if you look at 2030 expectation today, well, we're talking about 5 million barrels a day of higher production outlook for majors, and it's the same number in the global context. So all upward revisions, they did come from these companies. And this is a little bit how we think about the benchmarking, strategic benchmarking of these players. Generally speaking, there is a fairly high correlation. You have between how active these companies are in non-core segments. So I'm primarily talking about new low-carbon opportunities, renewable energy, CCS, green hydrogen, etc. So like Total, Eni, BP, these are 3 European majors which already allocate around 30% of their capital to these non-oil and gas sectors. And it correlates quite well with so-called upstream portfolio value at risk. So we look at this metric, basically, it's a theoretical risk, how much value of the core business is at risk if the demand surprises on the downside, or basically means energy transition surprises on the upside. And naturally, the higher your exposure is to non-oil and gas sectors, the lower value at risk you have. So again, American super majors, Chevron, Exxon, they're still pretty much placing most of their bets on continuous relevance of hydrocarbons in the next decades. And very important markets. Well, this market has become very important, especially for oil and gas peers. And it's a rapidly growing market today with a lot of opportunities actually for institutional investors too. And we see quite many of them actually becoming active in this space. It is the voluntary carbon market. We do have some of these self-established entities, companies like Vera, Gold Standard, American Carbon Registry, and a few others, which designed their own methodologies, and essentially they just assume the mandate to quantify the impact, environmental impact of different projects around the world. And these projects could be anything, starting from nature-based solutions like afforestation or reforestation initiatives, going to renewable energy integration into the grid, these type of offsets, some clean water projects in Africa, basically biogas integration. So there are many, many different project types. And in 2016, 2021, in that 5-year period, the market grew in a fairly exponential manner. That was the time when we had so many corporate buyers which really believed that they were doing something positive for the environment. And then there was a major change because we had some investigative journalism articles which were published by Guardian and a few other outlets in early 2022, which effectively challenged the credibility of these markets. Well, they found some projects which were certified by Vera, where apparently footprint areas were completely random numbers. So last year, we had this loss of confidence. Carbon credit markets around the world collapsed. We saw a temporary loss in the issuance, especially for nature-based solutions, and we saw a temporary slowdown in the retirement activity. What I want to highlight here is that the activity is coming back. Today, especially since the collapse of Article 6 discussions at COP28, because the governments failed to reach the consensus around cross-border carbon markets. So these discussions were kind of put on hold until COP29, which will be in Baku later this year. Since the time, the relevance of these voluntary markets has grown in a fairly unprecedented fashion again. Retirement activity today is at record high levels. We are retiring close to an average of 30 million tons of CO2 equivalent per month from various project types. And the biggest players in this space are oil and gas producers. So Shell, Eni, these two, actually, they're absolutely the largest players in the global markets. So naturally, when they talk about their net zero targets, and some of these targets are very ambitious, Eni has a net zero target for 2030. These targets include a very significant use of offsets. And today, the companies, they're still experimenting. They're trying to understand what type of projects are appreciated the most by the community. What type of projects can they use in the offset markets? So investors agree that they have sufficiently high quality and they can be counted as one-to-one with the real Scope 1 emissions. All right, and finally, just in the end of this session, I just wanted to show you this chart where we kind of benchmark all different oil and gas players on two metrics. On x-axis, you have a typical break-even price of their already producing assets. So it's a lot about the portfolio resiliency. And on y-axis, you have Scope 1 emission intensity. So it is essentially on intersection of first two strategic pillars for oil and gas players, which I showed you earlier in this presentation. And it is fascinating to observe how correlated these metrics are. And they were not that correlated, to be honest. Like 5 years ago, the dots were all over the board. But today, it is very, very clear that the companies which actually perform the best on one dimension, they also proactively high-grade their portfolio in an environmental dimension as well. So we saw so many divestitures in the last 3 to 4 years where the main rationale was driven by poor environmental performance of the assets. So majors divested many of these assets, and they were able to move both to the left and down on this chart. And I think this will be a continuous process. It will be like a constant competition, constant fight for the lowest cost and the most environmentally friendly producer. So I think this concludes my presentation. Thank you very much for attention, and I believe we can move to the Q&A session.
Thank you, Artem, for your insightful presentation, and we appreciate the deep dive into the energy market and clean tech and the implications of the future investment. Thank you again for sharing us your expertise with us today. And we got a question from the audience, and which is that the one of the global biofuel players, Neste's stock price is fairly listening. So what do you think drove that drops? Does that match your explanation?
Yeah, actually, well, Neste, honestly, Neste is the biggest driver behind the biofuel part of our own index. It's the largest company in this space. So everything you saw in the presentation for the biofuels index was predominantly driven by Neste's performance. And look, there are actually several reasons for that. First of all, Neste is very focused on sustainable aviation fuels, less so on the renewable diesel. And Neste is the operator of the largest SAF facility in the world in Singapore, and they have quite ambitious plans to expand their business in the next few years. The situation, the recent development with the SAF markets, there were two major setbacks. One, the demand is not growing as fast as many people hoped. EU now has very ambitious mandate. Singapore has ambitious mandates. UK is coming up with ambitious blended mandates. But in terms of the actual project development and permitting process, the suppliers are not able to actually deliver on the demand expectations as quickly. And I think there was this continuous downward pressure, on Neste stock throughout the last 12 to 15 months, coming from gradual degradation in the demand outlook for SAF. Again, this is a growing market, but things are just not happening as quickly as the investment community thought in past. And the second thing, which is also very important, the margins in this sector, I would say they are already degrading. There are serious concerns about feedstock price inflation. Like if you focus predominantly on used cooking oil, which is the main feedstock in this space, I think many people came to the realization that there are serious risks of upward pressure on the UCO prices once we start scaling global production. Asian markets, they already struggle to deliver on import coal, given that China has also quite ambitious domestic SAF target now. And I think all these feeds into the view which the investor community has on the future outlook for Neste. So essentially just slower growth expectation compared to the previous view, with probably weaker margins compared to the previous views.
Oh, thank you for that. And we have one more question, and then which is that regarding the green energy tech. So green energy tech shares have undergone a huge correction. So what is your view on the valuation of the green tech shares? Maybe PE based? That was the question.
Yeah, look, of course, I'm not here to give you an investment advice, but what I showed in the presentation, price earnings multiple for green energy stocks today is still much higher. It's above average. Let me put it this way, for the entire economy, and it's significantly higher than the average. So even after the correction, we clearly see that the investor community is thinking about this sector as growth sector. One thing I would like to highlight, but there is obviously one very important event happening later this year, which might change outlook for global energy sector quite significantly. It is the elections in the US. And we could say whatever we want about the real significance of this event, but there are certain things which are more or less fully in the US president power. If Trump wins the elections, well, it's quite easy to see the scenario where the US exits from the Paris Agreement again. If this happens second time in the current, economic reality which we are living in, where consumers, even in Eastern countries, they experienced severe inflation last years, other countries could start challenging the entire concept of the Paris Agreement, because they could argue, if the largest economy no longer supports it, why should we? So that is the biggest risk which we see. And of course, depending on the outcome of the US elections, you could see some fairly massive swings, not only in the US focused, clean energy stocks, but also in green energy stocks from other parts of the world.
Okay, I got it. Yeah, thank you for that. And we have another question from the audience. And considering that rate hikes hit hard the clean tech sector, and that H4L will be around for some time, so what can be some of the catalyst for the clean tech sector to regain growth momentum? For example, rate cuts or new real use cases.
Well, I think despite the interest rate hikes which we observed, there are some subsectors in the clean tech which still offer fairly good rates of return at the project level. And I'm not talking necessarily about solar and wind, like traditional renewables. This is the sector which was hit the hardest, because these projects, they can hardly fight the inflation today. But in the green hydrogen space, in the markets with maturing policy, so like on the demand side, which is predominantly EU and also the United States, many of these projects can be extremely profitable if you do it right. The reason why we saw this unprecedented correction is because the market was just overly optimistic 3-4 years ago on the speed of deployment of this technology and the learning of this technology. It didn't happen, but now we are back to reality. And in this reality, we're actually talking about quite significant, profitability of some of these initiatives. Same is true about other, policy-supported markets and opportunities, like renewable diesel, for example, in the US, SAF in Europe. We do believe that, with continuous maturation of policies, these segments could become major catalysts for the entire green energy market. And I didn't talk too much about batteries today, but this is absolutely kind of the golden opportunity. And if you just look at the learning curve, at the speed of technology progress, cost improvements with battery capex, it has been quite unprecedented in recent years, and it will continue in the next 3 to 5 years. So the costs of lithium-ion energy storage batteries 5 years down the road, they will be much, much lower than they are today. And already with the current costs, we are seeing increasing number of startups. Typically, they're backed by private equity firms, but some of them could become, quite large players in the market a few years down the road. They can justify battery energy storage as a standalone business opportunity. Many grids around the world, in other words, they already offer this opportunity to essentially produce energy during the peak generation hours at low costs, and then discharge batteries and sell it back into the grids during peak consumption hours. So I would say energy storage is definitely the biggest catalyst in the future, and this is the most important, maybe, clean tech sector to watch for investors.
Thank you for your insightful answer. And then, due to the time constraint, I need to ask my final question, and it's about how institutional investors should position their investment. With climate changes and global warming causing catastrophic damage from extreme weather events worldwide recently, and with things expected to get worse. So what advice do you have for investors in the energy sector? And it would be great if you could share some examples of what major global players are currently doing in this area.
One thing I would like to say, I think some institutional investors, especially in Europe and also the US, in the 3-4 years ago, some of them actually rushed a little bit with the big announcements of moving away from oil and gas. And some of these announcements, they were maybe to some extent a little bit premature. And we saw what happened with, accelerated, let's say, shift towards green energy sectors of the economy. So I think for institutional investors, it is very important actually to maintain a very good balance between, the public opinions, which of course you are supposed to represent, and rational kind of investment decisions in the context of existing policies. Because one thing which is definitely the case today, the world on the policy side, in geopolitical sense, is changing much faster than it did 15-20 years ago. And the number of events which result in big shocks, and obviously it doesn't make the life easier for institutional investors, but the number of such events, the frequency of such events is much higher. Which is why I do believe it is particularly important for institutional investors today to avoid too quick decisions until there is like a full confidence that a specific sector in a specific region is sufficiently mature from both technology and policy standpoint of view.
Wow, thank you so much. Yeah, and I think we are almost time's up. And thank you so much, Thank you so much for your precious time with the COPIA members. And Artem, would you like to make any farewell comments to COPIA members?
Thanks a lot. It was really a pleasure talking to you all today, and I hope to get similar opportunities in future as well. Thanks a lot.
Thank you so much. Yeah, and Mr. Zhang.
Yes, 네, 오늘 귀중한 시간 할애해 주셔서 감사드리고요. 저희가 내일까지 이메일로 다시 보기 링크를 이제 모든 신청자분들께 이제 전달 드릴 겁니다. 거기에 이제 요청을 주시면 저희가 오늘 프레젠테이션 발표 자료도 PDF로 저희가 드릴 수 있으니까요. 만약에 필요하시면 거기에 이제 메모를 좀 넣어서 저한테 주시면 제가 이제 또 팔로우업으로 이제 개별적으로 드리도록 하겠습니다. 네, 오늘 예, 다시 한번 참여해 주셔서 감사드리고요. 앞으로 기회가 되면은 좀 찾아뵙고 만날 수 있으면 좋겠습니다. 예, 좋은 하루 되십시오. 감사합니다.
네, 오늘 함께 해주신 여러분들께 감사드리고요. 앞으로도 저희 금융투자협회에서는 조금 더 좋은 글로벌 투자와 관련된 이슈들을 가지고 회원자 여러분들을 찾아뵙겠습니다. 그러면 더워지는 날씨에 건강에 각별히 유의하시기 바랍니다. 감사합니다.